Well, today we're taking a look at some first fiscal quarter results of two Canadian owned rather, but locally listed banking giants. We're talking, of course, about CIBC Caribbean as well as Scotiabank Trinidad and Tobago Limited. Now, both groups would have reported somewhat contrasting results for their first fiscal quarter. Let's dive right into it and look at what they would have reported and what investors might be able to anticipate in the coming months ahead. Turning firstly to Scotia Trinidad and Tobago, or Scotia SBTT, well, the group would have reported an earnings per share figure of just about 94.44 cents per share, which was a 1.3% improvement from the 93.2 cents recorded in that prior comparable period of fiscal 2024. Driving that performance was an improvement in net interest income of 10.4% from 346 million to 382 million. Overall, however, a decline in other revenue would have led to a net increase in total revenues from 481 to just about 494 million. Ultimately, profit after taxes would have improved just at 1.4% from 164 million to just about 166.5 million. When we take a look at that revenue composition and revenue trend, we can see that there was obviously positive growth over that comparable quarter of just about that 1.3%. However, the composition of that growth was surprisingly different in terms of contributions from each of the major segments. Net interest income, as mentioned, up just around 10.4%. There was roughly an 18% decline, however, in other income in that yellowish segment, falling from $135 million to $111 million. Of course, overall, that positive trend in growth, 2.6% in net interest income. Good news for investors and shareholders at this particular point in time. When we take a look at Scotia's asset composition, in terms of total assets, we see some notable changes in that blue segment. Total loans, the largest component rather of its asset portfolio, would have increased 7% from 19.9 billion to just about 21.3 billion. While investment holdings would have also increased 6.5% from 6.1 billion to just about $6.5 billion. Other assets declined marginally from 4.1 to 3.4 billion. Of course, the most important components for or revenue generating components would of course be investments as well as total loans. So positive trends in terms of asset composition for SBTT. So at a price of $55.05, Scotia is trading at a price-earnings ratio of 14.7 times, above the banking sector average of 10 times currently, and offers investors a fairly juicy dividend yield of 5.1% compared to the sector average of 4.8%. So with that modest revenue growth in mind, attractive dividends, but keeping an eye on relatively elevated valuations from a price-earnings ratio, Bourse is maintaining a market weight rating on Scotia for the time being with a stable outlook. Turning very quickly to CIBC Caribbean, well, for the first quarter of 2025, fiscal 2025, that is, the group would have reported an earnings per share figure of 24 cents per share, which was a 32% decline from the 35 cents per share TT equivalent recorded in that prior comparable period of 2024. Now, total revenues were up relatively stable, up 1.3% from 1.28 odd billion to just about 1.23 billion rather to 1.24 billion, a very modest increase. Operating expenses, however, increased 7.1% from 698 odd million TT equivalent to just about 747 million TT equivalent. There was quite a material swing in terms of credit loss expenses of 73 million in the most recently concluded quarter, TT equivalent, that is, from a credit loss release rather of 85.1 million, or right back in the prior comparable quarter, and that would have led to that net income to attributable to equity holders declining from 551 million TT equivalent to just about 363 million. Now, when we take a look at the revenue story, it has been relatively positive in light of falling U.S. interest rates, with the first quarter of 2024 increase from first quarter 2024 to 2025, overall up 1.3%, driven by a 10% roughly increase in net interest income, from 883 million to 901 million. And relatively, that's not 10% actually, that should be just about 2%. And a relatively stable performance in terms of operating income generation, a modest decline, in fact, from 344 million TT equivalent to just about 342 million. So when we take a look at the profit before tax by segment performance, there was a very mixed result overall for CIBC Caribbean. 57% improvement in personal and business banking in that yellowish segment, increasing from 92 million TT equivalent to 145 million. That was coupled with a 40% odd decline both in corporate and investment banking, falling from 484 to 290 million, as well as wealth management, its smallest segment, falling from 17 million TT equivalent to 10 million. So a mixed bag, certainly, in terms of profit before tax contributions by segment for CIBC Caribbean. So at a price of $8.13, CIBC is trading at a price-to-earnings ratio of 7.8 times. At the other end of the spectrum, in terms of price-to-earnings ratio in the banking sector, whose average is, of course, 10 times, and offers investors a dividend yield of 4.2%, below the sector average of 4.8%. But importantly, CIBC remits its dividend payments to shareholders in US dollars. So, of course, quite useful in an environment to have a TT dollar asset that generates a US dollar cash flow. So on the basis of that, those US dollar dividend payments, relatively stable revenue growth, but keeping an eye on those higher operating expenses, Bourse is maintaining a market weight rating on CIBC for the time being with a stable outlook. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at info@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.